All right. Welcome. Today is August 19th, 2024, and today's video is going to be over the trade recap for today. So let's get right into it, actually. So coming into this morning, I was anticipating for us to have a continuation from yesterday. So Thursday we disrespected Wednesday's price action, and we disrespected this drop down, and Thursday we expanded higher. So coming into Friday, it was either going to be, a continuation of the move, or, some sort of consolidation, because it is a Friday, so we could possibly set up, Friday could just be consolidation for us to set things up for next week. So the trade I took today was actually a short, and let me show you guys why. Alright, so here's the play right here. And like I said, I was bullish, right? And whenever prices retraced back inside this 4-hour fair value gap, we didn't really get much strong price movement upwards away from that 4-hour fair value gap. So here I'm just anticipating, okay, we're probably going to be consolidating, so I'm going to be trading lower time frame models. So the model I took today was based off of this 1-hour power of 3 right here. So this 1-hour candle, this 30-minute candle, and this 15-minute candle. So all three of those time frames, the 15, the 30-minute, and the 1 hour, they all have the same objective, which is to take out their relative low, right? And one thing I do want to note is pay attention to how prices close below this 15-minute inversion fair value gap here, or a 15-minute BISI, and then now it should be treated as an inversion. So we are disrespecting bullish PD arrays, right? And we are also trading inside this 15-minute fair value gap, and we haven't yet gotten a closure above it yet. So like I said, whenever I saw this, we came off of a 15-minute fair value gap, we disrespected this 15-minute BISI, and we created a bearish 15-minute power of 3, a bearish 30-minute power of 3, and a bearish 1-hour power of 3. So that's the confluences for this trade, right? So now all I need is a entry pattern for me to actually get into that trade. So I believe I went onto the 3-minute time frame. Yeah, the 3-minute time frame here. So there's this 3-minute fair value gap that we created right here, and prices, whenever prices retraces back inside this 3-minute fair value gap, I take my entry. So I take my entry at that 3-minute fair value gap, and I believe I had my stop loss at that 3-minute fair value gap's high, because I don't expect it to have a complete closure, or completely rebalance it. And it was actually 1-to-1, or exactly 1 R trade. So I can get that. Okay, well, it was somewhere right there, right? So like I said, I'm targeting that 15-minute low, that 30-minute low, and that 1-hour low, because all of those time frames, we all have the same objective. So let's go on to the 1-minute time frame here and take a look. Whenever prices opens up at 12 o'clock, here's a 12 o'clock open. So I'm going to note that as 12-hour power of 3, because if you're, power of 3, like I said, it's open, high, low, close. And ICT, I state this I don't know how many times now, but ICT states you always want to be selling above the open or buying below the open. In this case, I'm shorting into that 15-minute and 30-minute and hourly low, right? So that's what my objective is. So prices retraces back inside that 3-minute fair value gap here. Let me put some borders on it so you guys can see it a little bit clearer. So prices retraces back inside that 3-minute fair value gap, and I take my entry, And whenever prices takes out that 15-minute and 30-minute and 1 hour low, that's when I move my stops to break even. So I move my stops to break even, and I just let the trade run on its own. And I set up some standard deviations as well. So I had this swing high to this swing low, and I'm basically targeting, I can target that negative 0.5 standard deviation and negative 1 standard deviation. And I actually recorded a a trade execution video, so you guys can see how I'm managing the trade while I'm actually in this trade, because I do believe this is a plus setup. Like, this is actually one of those trades where I would have taken over and over again, because going back to the 15-minute time frame here, the question I always ask myself is, why did we create this power of 3? Is there a reason for the creation of a bearish power of 3? Well, like I said, prices retraces back inside this 15-minute fair value gap here. We retrace back inside that 15-minute fair value gap. We close below a 15-minute BISI. So now I don't take my entries based off of inversion fair value gaps. Inversion fair value gaps to me are more of a confluence. It's just an extra. So think of a trade setup as creating the perfect burger. That using whenever I see prices disrespect bullish PD array whenever I'm bearish, that's just like extra patties, extra mustard, extra ketchup, extra lettuces to my hamburger. It makes it even better. So whenever I saw that, that's when I was like, okay, yeah, we just disrespected a bullish PD array, and I'm bearish at the moment. Keep in mind, whenever I go into this 4 hour here time frame, we're actually bullish. But I myself understand that the objective I'm shooting for is lower time frame objectives. I'm not shooting for previous month's low. I understand that I'm just trading the smaller time frames model, because ICT states prices is fractal. So I'm just applying that fractality, and I'm just adding on to confluences. So like I said, I understood why we created this 15-minute power of 3, this bearish 15-minute power of 3 here. And I think some of the things I do want to note here is, whenever I actually was in this trade, I'll go over my my emotions and my thought process in this trade and what allowed me to hold this trade. So whenever you're in a trade, right, you're always considering to yourself, okay, well, once my partial gets taken, where can my next TP be? Where is my next partial? So like I said before, whenever prices took out this 15-minute and 30-minute and 1 hour low, I moved my stop loss to break even, right? And I took off this trade. I believe I was in 12 contracts, and I was risking $576, I believe. And during the trade, I'm telling myself, okay, I'm gonna look at all the power. Like I'm looking at all the power of 3s, and I'm seeing, okay, well, can we continue lower? So I believe one of the power of 3s that I actually held for is, and what allowed me to continue to hold my trade, is this 5-minute power of 3 right here. So based on this 5-minute low, 5-minute power of 3 here, what can I anticipate? I can anticipate for us to take out this 5-minute low first, right? I can anticipate for prices to create a open, create the high, and then take out the low first. This is what I'm anticipating. I don't anticipate something like this to occur. Open, and then we take out the high first. I don't anticipate that. It could happen, but like I said, I'm anticipating for us to take out the low first before anything else happens. So after we take out the low, then that's where I'm like, okay, I don't really care where prices goes after that, because I already moved my stops to break even. I've taken another partial here, and like seeing every single candle as an open, high, low, close candle is, to me, the most important concept. And another reason why I was able to hold this trade for is actually this 15-minute power of 3. So what can we anticipate with this next 15-minute power of 3 here? So based on this 15-minute candle, what can we anticipate just based on that 15-minute candle? And note and realize, I actually took my entry based on this candle. But as I'm in this trade, and when I saw the 15-minute candle's closure, I noticed, okay, well, based on this 15-minute candle's power of 3, what can I anticipate? Well, price is fractal, and power of 3 applies to every single candle. So, like I said, I can anticipate for us to take out this 15-minute candle's low based on how we close on this 15-minute candle. So, like I said, based on that, I set another partial at that 15-minute low, because, like I said, there should be a reason why prices keeps continuing lower, and power of 3 allows me to hold the trade and quite possibly even pyramid into a trade. I do have a pyramiding video coming out later, probably next month. I'm trying to only post 2 concept videos per month, but if you guys want, I can post the pyramiding video, and see how everybody likes it. If you guys like it, then I'll continue to post more per month. If you guys don't mention anything, I'm just gonna keep up with the schedule of posting only 2 concept videos per month. So like I said, so notice how I marked out the 5-minute low, the 15-minute low, right? So I keep moving up my partials there. So I took off another partial at the 5-minute low, and then I took off another partial at the 15-minute low. And I actually was this negative 0.5 standard deviation ended up being my terminus. So whenever prices swept that 15-minute low and took out the negative 0.5 standard deviation, that was when my trade was closed. And one thing I do want to note this trade is, look at how prices reacts to the new week opening gaps, consequent encroachment. Literally perfect. We tapped into that consequent encroachment, and notice we had like maybe a quarter of a point past that consequent encroachment. The algorithm, this is algorithmic like signatures. These are like very, very, the market's super precise. And trading ICT, it allows you to be in, it allows you to be in the flow with the markets. And yeah, I do think that's gonna wrap up the video. Some honorable mentions, I guess. This trade is, notice how I'm selling above the 12 o'clock opening price, time and price. This is an A+ setup. For me, this is like, there will never be any other setup for me that's better than this. Like, this is what I would always 100% take. I don't grade my trades based if it's a winner or a loser. I grade my performance based on the setup that I actually decided to take. And this, to me, I would give myself an A+ setup. And you guys can watch the execution video, or actually I would recommend watching the execution video first before even watching this breakdown. But during the execution video, you guys don't hear me talking, but I'm typing on the screen and such, and whatever. But my emotions this trade, I really try to keep it, I try to be content, I try to be in control, and I try to be in the flow with the markets. Like, we as traders, we're simply just observers, right? All I did was, hey, I saw my setup occur, and if the risk is there, I'm going to take that. I'm going to take that trade. It's just as simple as that. But yeah, we are simply observers. I guess that's the key takeaway for today's video. We are simply observers. That's the psychological takeaway from this video. And yeah, thank you guys so much for watching, and I hope you guys tune in for another video. I will be live streaming on Monday and probably throughout the entirety of next week. Look forward to that, and thank you guys so much. Okay, peace out. Bam.